I need you to stop scrolling for the next 10 minutes. Not because I'm trying to alarm you, not because I have a product to sell you, but because what I'm about to show you is the kind of thing that, once you see it, you cannot unsee it. And more importantly, once you understand what it means, you will look at every silver headline differently from this point forward. Put the phone down. Close the other tabs, because this video requires your full attention. Here's why. Silver just did something it has not done in 44 years. Not since 1980, not during the 2008 financial crisis, not during the COVID collapse, not during any of the major inflation scares, dollar crises, or commodity supercycles of the last 4 decades. Something happened quietly in the silver market that every major financial outlet missed, that every silver YouTube channel either didn't notice or chose not to cover. And that has implications for where this metal is going that most retail investors are completely unprepared for. By the end of this video, you will know exactly what happened, why it matters, and what the last time this occurred tells us about what comes next. Stay with me. Here's what frustrates me about the silver conversation right now. Every day I watch the same cycle repeat itself. Silver moves up 2%, channels flood the internet with moonshot predictions. Silver drops 3%. The same channels pivot to crash warnings. The content machine runs on emotion, not analysis. It runs on your reaction, not your understanding. And because of that noise, something genuinely significant just slipped past almost everyone. I've been watching silver markets closely for a long time. I've seen the manipulation narratives, the short squeeze campaigns, the institutional positioning debates. Most of it is recycled. Most of it is designed to keep you engaged rather than informed. But every once in a while, something real happens. Something that sits outside the normal cycle of hype and fear. Something that the data confirms quietly, without drama, without a viral thumbnail. This is one of those moments. And the fact that it's not being talked about, that right now as you're watching this video, the broader financial media has not connected these dots, that silence itself is one of the most telling parts of the story. Let me show you exactly what happened. I'm going to build this carefully because the context matters as much as the event itself. First, let's go back to 1980. 1980 was the last time silver experienced what analysts call a sustained contango collapse in the futures curve, combined with a simultaneous physical premium explosion. In plain language, the price of silver for future delivery dropped below the price of silver available right now, while at the same time, the premium buyers were paying for physical silver surge to historic levels. When those two things happen at the same time, it means one thing. The paper market and the physical market are starting to disconnect. Price on the screen and the price of the actual metal in your hand are moving in opposite directions. In 1980, that disconnect preceded one of the most violent silver price moves in recorded history. And it just happened again. Here's what the data is showing right now. Over the last 60 days, COMEX silver futures have been showing persistent backwardation in the near-term contracts. At the same time, dealers selling physical silver, coins, bars, rounds, have been charging premiums that have quietly crept back up to levels not seen since the peak of the 2021 silver squeeze. Taken individually, neither of these data points is explosive. Futures backwardation happens, physical premiums fluctuate, markets are noisy. But the last time both of these signals appeared simultaneously and sustained themselves for more than 30 days was 1980. Let that sit for a moment. Now here's the part nobody is connecting. In 1980, when this pattern emerged, the mainstream narrative was not about a silver breakout. The dominant conversation was about inflation, interest rates, and whether the Federal Reserve could regain control of the monetary system. Sound familiar? Have you ever wondered what a real market shock looks like? Let's rewind to 1980. The Hunt brothers famously tried to corner the silver market, setting prices to an astronomical $50 an ounce. It was a legendary, dramatic event that people still talk about today. But what if I told you that the situation brewing in the silver market right now could make the 1980 squeeze look like a minor tremor? Today, we're not just talking about a couple of wealthy individuals. We're talking about a fundamental structural stress that's been building for years. Stick with me, because we're going to break down why the silver market might be on the brink of its most significant move in modern history. So, what's the big deal? It all comes down to a growing disconnect between two worlds: the world of physical silver, the actual metal you can hold in your hand, and the world of paper silver. Paper silver includes things like futures contracts, options, and ETFs. It's essentially a promise to deliver silver or a bet on its price without anyone having to actually move the metal around. For decades, the system has worked more or less smoothly. The paper market is massive, dwarfing the amount of physical silver that's actually available for delivery at any given moment. This is called leverage. For every 1 ounce of real physical silver, there might be hundreds of paper claims on it. Think of it like a coat check at a massive party. They've given out 500 tickets, but they only have 10 coats in the back room. As long as only a few people come to claim their coats at any one time, everything seems fine. The system works. But what happens if everyone rushes to the counter at once and demands their coat? That's when the system breaks. And that's the core of the potential crisis we're looking at in the silver market today. This isn't a theory, it's a mathematical reality. There simply isn't enough registered, available for delivery silver in the vaults of exchanges like the COMEX to satisfy all the paper claims if a significant number of contract holders decided to stand for delivery and take their metal. Now, let's compare this to 1980. The Hunt brothers' attempt was a brute force attack. They used their immense wealth to buy up as much physical silver and futures contracts as they could. Their goal was to create a shortage and control the price. They were successful for a time, but the game changed on them. The exchange, COMEX, and the regulators changed the rules mid-game. They implemented liquidation-only orders, effectively forcing the Hunts to sell and breaking their corner on the market. The price crashed, and the story became a cautionary tale about taking on the establishment. But today's situation is fundamentally different. It's not driven by a few powerful players. It's a grassroots phenomenon, a slow-burn realization spreading across the globe. Individual investors, from small-time stackers to larger family offices, are increasingly losing faith in the paper system. They're not just buying ETFs, they're buying physical coins, bars, and rounds. They want the real thing. This demand isn't speculative in the same way. It's a flight to safety. People are seeing inflation eat away at their savings, and they're looking for real, tangible assets that have held their value for thousands of years. This steady, relentless drain of physical metal from the system is the key difference. Every ounce of silver that leaves a COMEX-approved vault and goes into a private safe is an ounce that can't be used to settle a paper contract. This is creating what we call a structural deficit. Industrial demand for silver is already massive and growing. It's essential for solar panels, electric vehicles, and countless electronics. So you have massive industrial demand on one side, and now you have a surge in investment demand for the physical metal on the other. Both are pulling from the same limited, above-ground supply. So where's the breaking point? It's impossible to name an exact date, but we can see the signs of stress. We see the registered inventories at the COMEX dwindling. We see premiums on physical silver products, the amount you pay over the spot price, remaining stubbornly high, which is a clear signal of a tight physical market. It's like a rubber band being stretched further and further. At some point, it's going to snap. When it does, we can see a rapid and dramatic repricing of silver. What would that look like? First, you'd see a complete divergence between the paper price and the physical price. The price you see on your screen might say one thing, but trying to actually buy a silver eagle for that price would be impossible. Dealers would be sold out, or the premiums would be astronomical. This is the moment the coat check runs out of coats. The paper market would be exposed, and confidence would evaporate overnight. This isn't just about the price going up. It's about a fundamental reset where the world is forced to reevaluate what an ounce of real silver is actually worth, free from the price suppression of a leveraged paper system. Unlike in 1980, the regulators can't just change the rules to stop millions of individual investors around the world who are simply choosing to own a real asset. You can't force someone to sell their physical property. This is a decentralized movement, and that's its strength. The pressure is coming from all directions, not from a single point that can be easily targeted. So what does this all mean for you? It means it's more important than ever to understand the difference between owning real silver and owning a paper promise for silver. The events of 1980 were a preview, a warning shot. The situation today is the main event, unfolding in slow motion. The structural stress between the paper and physical markets is undeniable. The question is no longer if this tension will resolve, but when and how. History shows that when these types of disconnects finally break, the resulting move is swift, powerful, and it changes the landscape for good. The great silver repricing may not be a single-day event like in the movies, but a powerful and undeniable trend that will reward those who understood the difference between a promise and possession. Thank you so much for watching. This is a complex topic, and I really appreciate you taking the time to dive deep with me. If you found this analysis valuable, please hit that like button and subscribe for more content just like this. And I'd love to hear your thoughts in the comments below. Do you think we're heading for a 1980 style event or something entirely new? Let's discuss it. See you in the next video.